Ladies and gentlemen, good day and welcome to the Q2 and H1FY25 conference call of WPIL Ltd. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, sir.
Thank you. Good evening, everyone. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations for WPIL Ltd. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the second quarter and first half of financial year 2025. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We firstly have with us Mr. Prakash Agarwal, Managing Director and Promoter, and Mr. K.K. Ganeriwala, Executive Director. Without any further delay, I request Mr. Prakash Agarwal to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj, and good evening, everyone. It is a pleasure to welcome you all to our earnings conference call for the second quarter and first half of the financial year 2025, and wish you a happy Diwali in advance. Let me first take you through the financial performance of the company, followed by the operation highlights. For the quarter under review, consolidated revenues from operations reached 491 crores, reflecting 54% Y-on-Y growth. EBITDA was 104 crores, representing a growth of 57% Y-on-Y, with EBITDA margins for the quarter reported at 21.27%. Profit after tax amounted to 70 crores, representing a growth of 64% Y-on-Y, and PAT margins were reported at 14.3%. For the first half under review, consolidated revenue from operations reached 853 crores, representing a growth of 33% Y-on-Y. EBITDA was 165 crores, a growth of 31%, with EBITDA margins for the period at 19.28%. Profit after tax amounted to 113 crores, representing a growth of 36% Y-on-Y, with PAT margins at 13.28%. On a standalone basis, the quarterly revenues grew by 78% Y-on-Y, reaching 330 crores, with EBITDA increasing by 104% Y-on-Y to 63 crores, and EBITDA margins at 19.22%. Net profit also grew by approximately 99% to 47 crores. For the first half, the standalone revenues grew by 55% Y-on-Y to 569 crores, EBITDA grew by 70% Y-on-Y to 103 crores, and EBITDA margins were 18.17%. Net profit grew by 70% Y-on-Y to 77 crores, with PAT margins at 13.6%. As on 30th September, our international order book stood at 534 crores. In the domestic order book, the project business stood at 2730 crores, while the domestic product business was around 401 crores. On the operation front, we witnessed a strong performance in the domestic business driven by both the product and project divisions. The product division revenues rose significantly to 83 crores in the first half of financial year, up from 60 crores in FY24. With a positive outlook supported by a growing product portfolio and a strong market presence, as well as excellent prospects on the export front from our international operations. The project division saw a substantial revenue increase as well, wherein the revenue for the first half reached 431 crores compared to 260 crores in FY24. Project execution momentum has picked up, with growth further expected to accelerate in the second half of the financial year post-monsoons. Project commissioning has remained on schedule over the past 2 quarters. Additionally, the company is actively pursuing new contract opportunities and expecting a boost in tender activity in the second half of the financial year. Our international operations remain stable with a strong outlook across all business units. Grupo Apulia in Italy is experiencing robust aftermarket performance and is positioned to benefit from the revival of delayed contracts in the MENA region. WPI South Africa has delivered exemplary results in first half, and with the Eggenbauer acquisition set to enhance product offerings in the expanding South African water sector. Large investment in South Africa's water and power sectors add to the positive growth outlook. Meanwhile, Sterling Pumps and United Pumps Australia have record order books and are on track for significant revenue growth in FY25. WPI Thailand is also benefiting from the country's substantial water infrastructure investments. With this, we can open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Siddhartha from Jefferies. Please go ahead.
Yeah. Hi there. First of all, congratulations for a great set of results. So just wanted to understand, our product business has, there is... Hello?
Yes, please go on.
Yeah, so our product business has done, tremendously well in this quarter. Just wanted to understand what has driven, this particular, segment. And two, how's the outlook? How's the international business, panning out? What's the demand scenario? So how about the oil and gas capex? We have seen that, it has slowed down a bit, earlier. So, what kind of, are there any offshoots there? So just wanted to understand the overall, pump business there.
So I think, the product business in India has been gaining strength over the last couple of years, especially with our new product offerings and our market presence, and translated into a strong order book, and we see good growth in it. And I think in the product business, project business, or our international business, we are not really looking at specific offshoots. We are looking at more steady growth because of the diversification and the reach which we have achieved. So we see steady growth coming from opportunities.
So no, sir. I'm more interested about your international business. Yeah, international product business.
Same for the international business also. Say, for example, as I mentioned, South Africa is making substantial investments in water, and the power sector is also bouncing back there. We are present in both, so we see good opportunities there. Already our order book is strong. And same in Aturia, as you mentioned, that Aturia has a lot of contracts also which are delayed due to this present Middle East crisis. Hopefully this will settle down. These are all infrastructure projects which can be postponed but not cancelled. And similarly in the oil and gas, as I mentioned, the aftermarket business, which is perpetual for keeping production constant, is unaffected by spikes in crude price. So again, that is a steady growth area. And we mentioned this new acquisition which we have done in South Africa, which will really strengthen the offering we have there, because we can cater to the entire water sector there now.
Okay, so got it, sir. Do you think this particular growth and margins are sustainable going forward?
Yes, we think we can keep growing.
So could you give some color on guidance, sir? What could be this year's overall revenue and let's say 2 years guidance?
No, I don't want to give any guidance. Just that we see strong growth and sustainability. So I think because we're not riding a particular wave or something, so it's more sustainable.
Okay, so and one more last question from my end, sir. And how about the project business, sir? How is it panning out for you?
The project business, as you said, we were working on enhancing revenues. So we are very pleased with the present jump in revenues which we've got, and we have been working on this for some time now. It's happened. And this will allow us to, get back to growth, because you cannot grow by order books, you have to grow by execution.
Correct. Yeah. Thank you, sir. Thank you. Happy Diwali for you.
Thank you. Happy Diwali to you.
Thank you. Before we move to the next question, a reminder to the participants: to ask a question, you may press star and 1. Next question is from the line of Deepak Purswani from Swan Investments. Please go ahead.
Yeah. Hi. Good evening, and congratulations to the management for excellent set of numbers. Sir, firstly, wanted to check it out on the execution front. If I were to look into the first half, we did in the project business, we did an execution of close to 430 odd crores, and currently we have the order book of 2,700 crores. So in the second half, how should we expect this run rate to continue going ahead?
It should keep improving. Very frankly, the second half, especially in the project business, is much better, primarily due to construction season. Already the dry weather is helping us ramp up production. The monsoons, this was a very heavy monsoon, so we really struggled in July, August, September, and really looking forward to the next 6 months to gain further traction.
And in terms of the challenges earlier we were facing with one of the clients in terms of BG and everything is now sorted, and execution is now in the full swing going ahead? How should we see?
Yeah, that's what I mean. We are focused. We as a company are totally focused on execution rather than building up a order book. So we are keeping it matching, and we've already gained with this ramp up in our revenues and the way we see it panning out in the next 6 months. The client's happy.
And sir, if I were to look into the further, let's say we have the order book of 2,700 crore at the current juncture, and probably in the second half we could do another 600 odd crore execution. So by end of next year, at the beginning of the year, we will have the order book of 2,100 crore. So if you can share your thoughts in terms of the execution for the FY26, especially you we are seeing boost in the new activities in terms of the order flow. So if you can throw some light on the order inflow, how should we see this from the medium-term perspective, so that this growth should sustain in this particular segment?
Absolutely right. So now that we have seen this ramp up in execution, which we have been mentioning for the last three quarters, now we are pleased, and we've started actively pursuing opportunities. As I mentioned, we see a lot of tenders coming up in the second half this year, primarily because of elections, and I think other state elections, things were delayed. There was less tendering opportunity, but I think that pent up jobs should be tendered soon and finalized before March. So we expect to get a good share from that.
So, sir, would you like to share any update on the bid pipeline at the current juncture? If you can throw some light on that, how has been the bid pipeline spanning out for us in this particular segment?
The bid pipeline has been quite, last 6 months has been quite slow in the entire water sector, and as I mentioned, it should ramp up now. I think we just started seeing some tenders coming out this month. So I think we should see a lot of tenders, because they have to use the budget by March, so they will tender and try to close it quickly.
Okay. And then, sir, moving to the product division, we did one new acquisition in the South Africa. If you can share the details on this acquisition in terms of the investment we made and what has been the financial performance of this subsidiary, and also what are the particular opportunities we would like to explore through this acquisition? So this business is we are a project company, and we work closely with them already, because we were supplying pumping solutions there. So by combining them, I think we have a broader offering for the client. The clients were the same, and we have a lot of expertise in India in our project business, so we can use this to get into South Africa, which has a large water investment plan, and Southern Africa. So this is what we had always wanted to do. We always thought that India and Africa are the two main areas for water infrastructure projects.
So we're very happy that we have a foothold in Africa, and we will look to build on this.
Okay. So this particular company is into the project business which we acquired, or it is a product company?
Project business. It is in the project business.
And can you please share the investment and the financial performance of this company for the last year or whatever the last report is?
The revenues were approximately 150 million rand, which is roughly 75 crores. And our investment is confidential, but was quite reasonable. Good value we could extract.
Okay. And then, sir, just move.
Mr. Deepak, may we please request you to rejoin the queue for the follow-up questions, as several participants are waiting for their turn.
Sure, I will read.
Thank you. Next question is from the line of Nikunj Doshi from Bay Capital. Please go ahead.
Yeah, thank you and good evening. Yeah. Just wanted to understand the margin profile that we have, because we have significant portion of revenue coming from projects, and yet our margins are very high, means I would say so, is comparable to other engineering companies. So what is helping us in margins? So are the product margins like significantly high that's helping us to achieve the overall margins? Can you just guide us on that?
Actually, we are quite differentiated in our product offering. We give solutions. So I think we are not primarily an EPC company as such. We are in the flow solution business. So we are always looking at retaining our margin. So we do projects where we can get our margin. And that's why we are not so revenue focused. That is one. We've always targeted businesses. We expect our business to be between 15 to 20%. So when it is getting to 20%, we start pushing revenues. And when it's getting 15%, then we start looking at how do we build the margin up again.
Okay.
That is, so we want to be there, and we have a lot of different high value products. Like, for example, in the projects we did these pump turbines for these water river linking projects, which are very high margin because they're very mission critical pumps. Similarly, in water projects, we try to do EPC where we can do engineering. So by using sound engineering and good, our expertise there, we can add value and get money.
Okay. So can we assume, means as you mentioned, 15 to 20% is the range that we have to look for in the margin?
That's our, mandate, or say what we aim at. And any business we want to do, we want to stay in that. We don't want to do commoditized businesses.
Okay. And just one more, just to understand the business better, means we have so many presence across so many countries and geographies. So how do we manage our business? Means what is the organization structure that we have to take care of this execution, project execution, and the revenue sales management?
So we are very fortunate that we have these businesses that we buy and try to add value to. They are all very strong brands, number one. Mm-hmm. So they have a basic business and a team. So they are all existing for more than 30, 40, 50 years. Mm-hmm. So it's well entrenched in markets and well entrenched teams. So we basically work on the board of directors, and we let the operations, to the team itself. And secondly, then we focus ourselves on synergy. So by using synergy between ourselves, like we have a lot of R&D resources or management resources, supply chain resources, which we can add further value and we can improve their operations.
This is really remarkable. Thank you, and all the best. Congratulations.
Thank you. Next question is from the line of Nirav Sheth from MK Global. Please go ahead.
Congratulations, Mr. Prakash. This is a flow of numbers. Two quick questions. You've always talked about trying to pace up your execution capacity, and that the order book should move in tandem with that. Are there any critical bottlenecks you see in trying to speed up your execution levels further, because the opportunity ahead is immense? That's my number one question. So, no, absolutely not. We're very happy that we have done it.
it was a good ramp up, and we are confident of further enhancing this going forward. So no challenge there now.
Okay. Second question is, if you look at some of your competitors, they are into probably slightly low value-added stuff like, solar pumps and all, but there is also big addressable market, and they've been able to create some value opportunity over there. Is that a market that you have shunned out of choice because it is low margin? Just trying to gather your thoughts over here.
Yeah, actually, first of all, we've been in this business for a very long time, and we have all these companies which are there with sustainable business models. Firstly, we actually explored the option of solar and felt that it not commensurate with us. One, because the solar pumping system, it's a system, and the buyouts are very high. So the pump component is quite small in that. And secondly, it's quite a commoditized product.
Got it. Third, final question. You're sitting on substantial cash, and historically you've deployed capital very effectively in acquisitions. Are we getting close to getting our door through in US, which is the biggest market? Are valuations a challenge? Something like that. Where are we on that?
So we are this South Africa was our first step. We have been aggressively exploring this. Yes, we missed out a couple of opportunities because of valuation. However, we have a very big pipeline up ahead, and very confident of keeping this run rate going.
Excellent. Thank you. Just one more question to Mr. Ganeriwala. Sir, this negative operating cash flow that you are seeing right now, I'm assuming is transient, just billing differences in receivables?
Yeah, this is because of receivables.
Okay, perfect. Thank you. Excellent.
Thank you. Next question is from the line of Namish Gupta from NGC. Please go ahead.
Yeah. Hi, sir. Congratulations for a very good set of numbers. I have some 2-3 questions. My first question is, sir, what is our competitive advantage, or any entry barriers or any niche in the businesses that we operate in? And another question is, sir, currently what is our total addressable market as of now?
Firstly, I think we have very strong brands and business models. So our technology, our market presence, the brand recall, these are what positions us as a very strong player in the markets. Secondly, I think we have a very big entry barrier in this segment in which we operate, and that's what we want to operate in, so that we can add value which others cannot. The entry barriers, people, all our projects or plants or equipment are for lifetimes of about 20 to 50 years. So when someone buys a product for 20 to 50 years, they need assurance that this guy has supplied it earlier and it is working, and what's the track record like. So that is the biggest entry barrier to this in our sector. Second, the addressable market is very large because the global pump business is roughly about close to 70 billion, and India is quite a small segment in that. So our aim was to try to address the global pump market. So we try to go in different product ranges, and wherever we see opportunities is one. And the secondly, the project business in India and Africa is another very big business segment. For example, the tender system in the water sector is roughly somewhere between 1 lakh to 2 lakh crores a year in India. Then the business composed of large player, large, medium, small, and we are slowly moving into the medium to large player in this segment.
Okay, and sir, one more question I would like to ask, sir. Who are our competitors in Indian markets, sir, in big players, sir?
I think we don't have a one-to-one competitor because we operate in different segments. So in projects, as you know, the big players are L&T, NCC, Kalpataru. They are all operating very strong players in the water segment. And in the pump segment, we are competing with Kirloskar in some of the engineered products and different companies in different products. So we have a wide range of products, and we are focused on the engineered range, and we have different competitors there. Some of the players are global. So, it's different players in different segments. And that's why we've diversified into, it's one business, but diversified over a lot of different segments.
Okay. So thanks, sir. I will again join in queue, sir.
Thank you. Next question is from the line of Samir Palod from AUM. Please go ahead.
Yeah, hi. Am I audible?
Yes,
you are.
Go ahead.
Congratulations on a fantastic set of numbers. Prakashji, one question. You had an international subsidiary which was divested last year at around 600 crores, which had the nuclear pumping technology. From what we are reading, that is going to be a very, very large opportunity internationally as well as possibly in India as well. So any thoughts on how do you stay relevant in addressing that market, or is that a market not for you?
Yeah, we decided the market is not for us. One is that I think nuclear is a very long life cycle. The projects take a long time to come through. These programs are ever shifting, and the opportunity is not that large because you have to take the time frame. A nuclear plant takes about 15 years to set up, so very long tenures. So you get one contract which is executed, and then you are setting it up, and then you would get aftermarket business, which is for the next 30, 40 years. So we decided that the resources, this valuation we could get is better used in other areas.
Right. And so my last question is on the industrial segment, the product segment in India. If you can just elaborate a few examples of what are the kinds of solutions that you're providing, let's say for a very large industrial customer, etc., just to give us a sense of what the opportunity is. We are aware of the sort of government Jal Mission and all of those kinds of projects. But on the product side, where you are customizing products for industrial applications, if you could just throw some light on that.
So in industrial products, most of these plants, any industrial plant has a cooling water system, because any operation, whether heat generated, needs to be cooled. Then you need to take the water from the reservoir. It's an intake water. Then that entire water is stored and pumped throughout the plant. So you have cooling towers. Say, for example, a steel plant, they will have to cool the blast furnace. So they will have to cool the rolling mills. So they will run circuits, cooling circuits. And all those circuits are moved by pumps. So that is one, for example. And now in power plants, we are very big because, the steam is what you're using. So you're pumping a huge amount of water through the boiler turbines and then through the cooling towers, cooling it down. So to keep the circuit moving, so you take water from the source and then you put it in the system and you keep circulating it. So that circulating water system is primarily the area, and which is in every industry.
Right. So, but you mentioned that a lot of your competitors, but they're all EPC companies in this segment, right? L&T and Kalpataru. So where are they buying the product from? Yeah,
first of all, as you said, industrial segment, it's bought directly by the, say, SAIL or Tisco and Reliance, etc. But in the EPC segment, now you have a water segment where we do projects. So in water, yes, our L&T would be buying from us, or L&T is buying from us, Kalpataru is buying from us, and so on and so forth. So we would supply to all the contractors also, the pumps. That is in water. Again, in irrigation, we would supply the pumps to them. In sewage, we would supply the pumps. In drainage, we would supply the pumps to them.
So just supplying the pumps, who is your larger competitor? not the EPC guys, but guys you compete with for supply of the pumps. Who would the EPC contractors go to other than you?
As I mentioned, Kirloskar. So for water, in our water projects, irrigation projects, mostly it's Kirloskar. In sewage and drainage, it's different players. In Navy, it's different players where we have, so defense is a big area for us.
Lovely. Thank you and all the best and festive wishes to you.
Thank you.
Thank you. Next question is from the line of Balu from Parami Financial Service. Please go ahead. Balu, your line is unmuted. Please go ahead with your question. As there is no response from the current questioner, we will move to the next question from the line of Vinay Nadkarni from Hathway Investments Private Limited. Please go ahead.
Prakash, just wanted to check out the growth in this particular quarter. Was it something to do with the first quarter being the election quarter and therefore not many government orders came about and all those got bunched in the second quarter?
No, it's the fact that, the order book has been growing and obviously the execution comes with a lag. So the order book grew first with the business opportunities and then the execution has started developing from there.
And just on the South African acquisition, roughly what kind of addition to the top line would you estimate that in FY26?
The business, as I mentioned, had revenues of roughly 150 million rand, which is 75 crores. So, we will hope beyond that. We would look to be hoping that we can grow that.
Okay, and the margins are similar to Indian margins or better than that?
No, we will have to improve that. So that's where we want to add value to.
Okay, you can share the current margins there?
It's lower than our Indian margins, so we think we can add value there.
Okay, thank you. Thanks a lot. All the best and happy Diwali to you.
Happy Diwali to you. Thank you.
Thank you. Next question is from the line of Tej Patel from Niveshaay. Please go ahead.
Hello. Am I audible, sir?
Yes,
you are.
Go ahead.
Thank you so much for the opportunity and congratulations to you for an amazing execution, especially in quarter two. So, sir, I wanted to understand the end user. I mean, if you could just give a breakup of your project order book in terms of, like, say, how much is towards, let's say, power, how much is towards, let's say, water, and water also, if you could specifically break down, let's say, how much is for sewage, how much is for water supply, and irrigation is also a component of that. So, if you just can give me a breakup of this.
So, in our, over the last 3-4 years, the water segment was dominated by this Jal Jeevan mission of the government. And post that, we see the build-up in Amrut scheme, which is the urban water. So we have rural water under Jal Jeevan and urban water under Amrut. So these two were major constituents in our order book. And prior to that, we had a large number of irrigation jobs. So now that, we see a shift back to irrigation because we've got a good amount of traction in water in the country, building up a lot of capacity. So I think it keeps fluctuating, but primarily between water and irrigation is where our project division works. Our pumps work across all sectors.
But is there any major end user segment in, let's say, a pump also, towards from which you are deriving majority of your revenue from? Because you give your pumps for Navy also, and then you give your pumps for irrigation also, and then for sewage plants also. So I'm just trying to understand where does your majority of the revenues comes from?
It's very balanced there. We had a big thrust because, if there are a large number of water projects awarded, in the last 2 years, we had a large segment of water pumps requirement. Now, we see that shift going to irrigation, then we will have a large number of irrigation pumps. Industrial, power, etc., Navy. Navy is a big growth area, which is given by the government, so we see a good growth there. But so it's quite balanced for us over a period of time. So if you take a 5-year cycle, it's quite balanced proportion.
Got it. And so what would be our current bank guarantee limits and how much of it would be utilized as of now?
I'm sorry, I don't have that here, but it's commensurate with our business. No challenge there.
So what was I trying to understand is how much order can we take on more given our, let's say, unutilized?
I think we can, you see, the orders, very frankly, in the project business have a time frame of about 2 years. So if you look at 2-year time frame for an order, so, it has to be, we target to have an order book of about 2.5 times our revenue.
Okay.
So our revenue, was about 800 crores previously. So we were pushing up our revenues so that we can enhance the order book. We have to keep that balance. Otherwise, you will have unexecuted orders which are very painful for the company.
Got it. And sir, for the pump
Mr. Patel, may we please request you to rejoin the queue for the follow-up questions?
Yeah.
Thank you.
Thank you.
Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please restrict your questions to 2 per participants. If you have any follow-up questions, please rejoin the queue. Next question is from the line of Siddhartha from Caprice Investments. Please go ahead.
Yeah. Hi, sir. One more question from my end. So since we're sitting on, huge pile of cash, so so did you narrow down on any, potential acquisition targets? I know we wanted to, get a foothold in North America. Just wanted to understand. So what's the game plan here?
Yes, exactly. So we have a long list of targets and we are actively pursuing them. And yes, you're right. One of the major addressable markets for us is the US. And, we want to deploy this cash well. So we are also keen. I think the market is now more favorable. The valuations are becoming reasonable. So we see good opportunity there now.
Okay. Can we expect, an announcement soon, sir?
I hope so. So the South African one was a good start, and I think we will build up on this in the second half.
Yeah, sure. Thank you.
Thank you. Next question is from the line of Raman KV from Sequent Investments. Please go ahead. Sorry to interrupt, Mr. Raman. Your voice is not audible.
Hello, can you hear me?
Yes, please go ahead.
So I just want to know the guidelines of FY25.
I think we are seeing good growth, as we have been mentioning, with a good, strong order book and very robust outlook across all our businesses. We see good growth in FY25.
So can I get some numbers with respect to it?
So we don't like to give guidance because there are quite a few moving parts. You have, say, for example, some projects shifting, some dispatches shifting. So I think we will avoid that.
And one small clarification. You said there are 600 crores is under execution, and around 2,700 crores is the order book with respect to the projects, right?
Last year we had a revenue execution of about 800 crores, and present order book as of today is 2,730 in the projects.
Oh, okay. Thank you, sir.
Thank you.
Thank you. Next question is from the line of Ankit from Alpha Capital. Please go ahead. Ankit, your line is unmuted. Please proceed.
Hello, sir. Am I audible?
Yes, please proceed.
Yeah, thank you for taking my question. Sir, as in project business, you said second half is much better than first half, so that is understandable. But I guess even in pump side, the same is true. Is that so, sir? Again, can you please comment why?
Yes, it's same because you're absolutely right. Because again, the contractors also, the people we supply to, like us, they would also be buying more in the second half. And the governments also, they are pushing in the second half. So we see a lot of, the quicker short turnaround orders also coming in now. So overall, if you see our history, it's always been a build-up from the first quarter onwards. The last quarter is the biggest normally.
Got it, sir. And sir, on margin side, you said 15 to 20% is generally the range. But I see in this Q2 as well as last year, Q2 we had around 21% margin, which tend to reduce going forward. Why is that, sir? And what should be our expectation?
I think similarly, so it keeps fluctuating through the year, but we keep it in that area. We might have a good year, certain good projects went out, certain area regions performed well. So it shifts the thing, but it's a mix of revenue. So when the revenues are increasing, the margin also I see moderates.
Got it, sir. Thank you and all the best.
Thank you. Next question is from the line of Saket Kapoor from Kapoor & Co. Please go ahead.
Yeah, namaskar, sir, and thank you for the opportunity. Sir, I joined very late, so sorry for any repetition. Firstly, sir, the government is very much keen on this river linking project. So, in this scope of work, what can be that kind of requirement, or either in the project business or in the pump side, where we can be an active player?
We are one of the few people who have executed these size. We have done these large 30 megawatt pump turbines for river linking in Telangana, and we successfully commissioned both the schemes last year. So we are well placed when the river linking projects take up.
Okay, I think so the Ben Ketwa project, I think so that is what is being talked about. So you would be having better understanding on the same side.
When we mention irrigation, a lot of these large irrigation projects are actually river linking.
Okay, sir. Okay.
We have seen some in Rajasthan already.
So there is lot of trust. That is what understanding will be going there.
As I mentioned, to be very clear, the investment in water and irrigation and river linking, sewage drainage is going to be there for a very long time.
Right, sir. Sir, when we look, sir, at the order book mix, you have which have been presented in the presentation, O&M part is around 529 crore and 2200 is the project side of it, that is the construction side of it. So what should be the executable period for the same? And I think so for international order book is totally about this pumps part, that is the product side. So if you could just give a timeline on the executable period for both the segments.
Both the segments, just the product segment, we normally look at a lead time of anywhere between 4 to 8 months, depending on the product. And in the projects, we are looking at a rough idea is 2 years execution. So, some projects get delayed, postponed because of some design issues, some land issue. So, you can take it 2.5 years is what we are aiming. That we would like an order book to be round about 2.5 times of our revenue, execution capability.
Just to add to it, sir, we have always seen...
Mr. Kapoor, may we please request you to rejoin the queue for the follow-up question, sir?
ठीक है sir, opportunity दीजिएगा. Thank you.
Thank you, sir. Next question is from the line of Vineet Lambu from HSBC Asset Management. Please go ahead.
Hello, sir. Good evening. So I have a question on the project business.
Vineet, your voice is very low. Please use your handset.
Yes, ma'am. Can you hear me clearly now?
Yes, please go ahead.
So I have a question regarding the projects business. So right now, 2,700 crores, whatever the order book is there, out of this, what would be the exposure to Jal Nigam or these missions of government projects, if I can know?
I think close to 60% would be right now, Jal Jeevan. And just to qualify that, we have the O&M business also in that in the project business, which will continue for a long time. So we will be having a significant presence in the Jal Jeevan. The O&Ms are about 15 years, 10 to 15 years.
And any order book wins in this first half? Like, have won any order book?
We've had small orders which are add-ons to the present projects, but no major project because the tenders were not there or very few.
Okay. And just last one question. So what is the win rate of our projects which we bid, and any pipeline which is visible from different governments, and in which states you are present in? So that would be helpful. Because your exposure is a lot towards government projects, so that's why I want to know, like, in which states you are present in and which states you are focusing in.
So water and irrigation are both state subjects. So yes, we are working with the state. Now it will depend on where the investments come. Right now there is a sort of a lull period going on, and we expect major thrust in the second half. So I think we'll be able to talk more about the bid pipeline and prospects in the next meetings.
Okay, like which states you are present in, if you can.
Right now we are present in, we are working in more or less all the states. Majorly we were working in Madhya Pradesh and West Bengal, and we are working in Telangana, we are working in Gujarat, we are working in Maharashtra. So quite spread out in the big states.
Okay, thank you.
Thank you. Next question is from the line of Deepak Parswani from Swan Investments. Please go ahead.
Yeah, thank you for the follow-up opportunity. So just continuing on the international market, if you could throw some light in the Australian market, especially for Sterling pumps and United pump, how do we see the underlying environment at the current juncture, and how should we see the opportunities here?
So the Australian market, both companies are doing exceedingly well, and the growth prospects are very large there. The new acquisition we did of United Pumps has really been successful, and we are ramping up our execution there also, because after buying this business we got a large amount of orders, and that execution is now coming through. So second half of this year and going forward, we should see a jump there. We've already seen it in South Africa. Now we expect it in Australia.
Okay. So, sir, in the investor presentation, we have mentioned out of the total international order book of 534, Australian market is 21%, which is order book of 112 crore. And if I were to look into the previous quarter in the same time, it used to be 136 or 156 crore. So just wanted to check, am I missing something, or how should we look into the order inflow opportunity in the Australian market?
I think we are at a good size. I think what you are mentioning, say about 20 to 25 million Australian dollar size. We again, we have to deliver, and then we can ramp up. So the opportunities exist. We are one of the strongest players in the oil and gas sector in Australia. Huge amount of gas investments LNG terminals are being put up there. So we are the preferred supplier there. So, I think execution is there also, an area we are focusing on now. The order book is right there for us.
Okay. And then, sir, on the cash,
Mr. Deepak, maybe
just last question. Just last question also.
Sir, please rejoin the queue for the follow-up. Many participants are waiting for the turn.
Oh, no problem.
Thank you. Next question is from the line of Janish Shah, an individual investor. Please go ahead.
Yeah, thank you, sir.
Mr. Janish, there is disturbance from your lines. Your voice is not clear.
Is it? Hello?
Yes, please go ahead.
Yeah. So congratulations on a good set of numbers, and so I just have a couple of questions. One on the margins in the pump segment. I think it has all been now at 25% on an EBIT level, which is visible in the numbers. just wanted to understand, is there a product mix which has played a part here in boosting the margins here, or it is more like a secular trend in the business where structurally the margin in the business is changing? That is one question. And second, as you're looking out for acquisition opportunities, what are the guardrails you've earmarked when it comes to the target companies? Is it in the form of the capabilities which you want to build, and also on the financial metrics, what kind of payback periods or the IRRs you're looking at in such kind of an opportunity? You can just give some better understanding, that will be helpful. Thank you, sir.
Two things. One is, I think the product margins across our businesses, as we have mentioned, are strong and stable. So it's not that it is fluctuating based on a trend. Yes, sometimes we feel a bit of pressure because of commodity prices. Right now, commodity prices are stable and have corrected from their highs. So, that's a positive tailwind there. And but otherwise, we are very mission critical products and a lot of aftermarket there. So close to the customer, and this is the sort of margin range we operate in. And the second thing is we're looking at enhancing businesses in the same products we are in, and we want to expand into different geographies and further strengthen our operations. So if you see, we bought one business in Italy and we merged it with our Italian business, so that strengthened it. Same we did in Australia. Now the same thing we're doing in South Africa. In India, we bought Moti pumps and we merged it into our business. So this is the trend. We keep building on these competencies. Very focused. It's not just acquisition for acquisition's sake. Where we can add value. So basically more driven by synergy. And yes, we are looking for businesses at a very good value. We don't want to overpay. We're looking at a payback of 4 years.
Okay. So 4 years of payback, which you're looking at in the investments, which you're going to make.
We hope we can get it at that.
Okay. Thank you, sir. Congratulations, and again, for the good set of numbers that you delivered. Thank you, sir.
Thank you.
Thank you. Next question is from the line of Namish Gupta from NGC. Please proceed.
Yes, sir. I just want to know, in pump segment, sir, what is our market share, currently, sir?
Our market share is, the market is very, very big. As I just mentioned that we are trying to be an international player or a global player and operating in global markets. The global pump market is about 70 billion. So, even 1% is 700 million, which is about 6,000 crores. So very far away for us. And we try to use the size of the global market and the range of the global market. That is, one is the size of different geographies, and second is the different market segments. Like, for example, you have positive displacement pumps, centrifugal pumps, and various sub-segments within that. So we try to be in as many segments as we can so that we can gain, revenues. We are looking at an overall market share, not in, as in a country. Say, for example, in India, we are operating in, power plant pumps, and then we are operating in sewage pumps. So we have different market shares in each product.
Okay. So like in India,
we would be in the top 4 in every segment we work in.
Okay. So sir, in India, you said, in some of the pumping solutions, our main competitor is Kirloskar. So can you just guide me what kind of market share we enjoy, at least in India region?
As I said, we are in top 4 in all segments. That is our aim. We are in top 4 in all our segments in India and globally. Wherever we operate, we are in the top 4. But the percentage varies from time to time.
Okay. Fine, sir. Thank you, sir.
Thank you. Next question is from the line of Ravi Anand, an individual investor. Please go ahead.
Good evening, sir. My first question is, how many projects are nearing completion in Q3 of 25?
In the second half of the year, we are looking at about 4 to 5 projects for commissioning.
Right, sir. And second question is, sir, what is the status of the onboard pumps for the Indian Navy?
They are progressing very well, and we look forward to getting bulk orders from next year, that means next calendar year.
Thank you, sir.
Thank you. Next question is from the line of Tej Patel from Niveshaay. Please go ahead.
Thank you for the opportunity. My questions have been covered by the previous participants. Thank you.
Thank you. Next question is from the line of Aditya from Savelio Investments Managers. Please go ahead.
So, I have a couple of questions. One is that I just want to know that these projects which are awarded by the state government, are they fully funded by the state government, or is it like partial state and central, or do you also have like multilateral agencies which are part of the funding? And if with that, follow-on would be like, does that impact your collection in terms of revenues? Like, there's events like elections, do these things impact your revenue collection?
One is, I think we're looking at a mix of funding. The Jal Jeevan Mission was a special scheme where the center and state were co-partnering there. Center supported the states. But otherwise, mostly the water is a state subject. The state uses its own funds and sometimes reaches out to, so we have some, like we are doing a West Bengal project in Purulia, which is ADP funded. At the same time, we are doing a Purulia project, which is Jal Jeevan Mission project. So it's a mix of funding agencies. Secondly, yes, we have seen in the last 6 months, funding has been affected. First the election and then the state election.
Okay, so that means that there is a chance for delay, but there's no chance for default, right?
Yes, I think that is very correct statement you've made.
Fine. And then a previous participant did ask this, but I want a little more clarity, especially in terms of the states in India. Can you just give, you mentioned Madhya Pradesh, West Bengal, Telangana, Gujarat, Maharashtra. Is this in order of revenue that you mentioned? Because I just want to know that in order of revenue.
I just want to clarify that the Jal Jeevan Mission, when we got involved, we focused on the states which had maximum schemes to be implemented. For example, Goa was 100% already, all Jal Jeevan Mission projects were already done. Same in Telangana. So Madhya Pradesh, West Bengal and UP were the states where there were a large number of projects in the pipeline. That's why we focused on that. So similarly, in irrigation, you will see like Maharashtra is a big area. A lot of irrigation schemes are there. Rajasthan has taken up a large number of river linking project schemes. So you have to go where the opportunity is.
Okay, this is just a follow-up to the question I asked. So in your current list, which state ranks high? I mean, the order of revenue by state. Do you have that handy?
Very frankly, we are now looking at the next set of work which is coming up. The old jobs are quite advanced. So it will shift the matrix. That's why the history is not a precursor to the future. For example, Madhya Pradesh, most of the Jal Jeevan schemes have been awarded already.
Okay.
Thank you. Next follow-up question is from the line of Vineet Lambu from HSBC Asset Management. Please go ahead.
So I have a similar question on the project revenue. So last year the project revenue was skewed, 65% execution was in second half and 35% was in first half. So this would be similarly in the range in this year also, the execution would be similarly skewed.
It will be skewed because, as I mentioned, that the post-monsoon season is the real work season for us. We are looking at good growth in the 6 months. The percentages might change, but yes, it will be skewed.
Okay. Thank you.
Thank you. Next follow-up question is from the line of Deepak Purswani from Swan Investments. Please go ahead.
Hello.
Yes, please go ahead.
Yeah. So just wanted to check it out on the cash flows. Since this time we have a negative operating cash flow, if I were to look into the broader items, there are the two broader items apart from the trade payables. That is contractual assets, which has increased this time in the balance sheet, and contracts liability, which has declined this time. So contract asset has grown at 82 crore odd. So if you can give some sense what exactly these items are and how should we look into going ahead in terms of the cash flow?
So one is receivables. We should see that improving. There was a sluggishness due to elections and spillover from that. We are already seeing a bit of easing there, and we see it further improving as the months go by, next couple of months. That is one. Secondly, as you execute, the billing schedules are such that you have a significant amount for commissioning. So as more projects are commissioned, the assets will go down and the liabilities will increase.
Okay. Thank you, sir. Thanks a lot, and wish you a happy Diwali.
Thank you. Happy Diwali.
Thank you. Next follow-up question is from the line of Vinay Nadkarni from Hathway Investments Private Limited. Please go ahead.
Yeah. Just one quick question on the margins when I see this current quarter, both for international as well as domestic. They have jumped up, especially if I see, I'm talking year on year. For international, it's a jump from 16.5 to almost 25.5. Any particular thing where we have made this growth? Is it more in value or price increases, or what exactly is it?
The one point I see as a trend is that we had always mentioned that we wanted to bring our product ratio up. That means our project revenues had moved disproportionately to our product. Our product revenues have started going up, and we see this positively influencing margins going forward.
Okay, and in domestic also, the margin has gone up because of domestic. Sorry.
This is primarily domestic. In the domestic segment, we have projects and products. So as the ratio increases of products, we will find margins improving.
Fantastic. And in international, the jump of almost...
International is pretty stable. No significant reason for a quarter. It could be a quarter-on-quarter change.
Okay. Thank you very much.
Thank you. Next follow-up question is from the line of Saket Kapoor from Kapoor & Co. Please go ahead.
Yeah, thank you, sir. Sir, when we look at our cash flow and then simultaneously on the balance sheet part, we have long-term borrowing, which we have drawn closer to 100 crores. So if you could explain to us the nature of the same and then the terms and the purpose of this long-term borrowing, sir, and cost of funds.
It's for working capital only, no other specific purpose. We faced some, as I mentioned, that the fund flow receivables went up because of the fund flow from the government was slow. So we took this, just to give ourselves some headroom there, we took this long-term loan. But as things ease out now, we will maybe prepay it if required.
Okay. So since they are clubbed under the non-current liability, I thought that it is for a longer tenure. So they would.
So we took a precautionary thing that in case this dragged on this crisis, fund issue.
Correct. And sir, I missed your in opening remarks. Sir, have you mentioned about the cost of acquisition for our South African?
I mentioned it's confidential and quite it's quite small.
Quite small, but as you, sir.
Relative to the business we have bought, it's quite small.
Okay, sir. Any strategic part, sir, we are playing in terms of this then small acquisition? Where do this company fits in the realm of things that attracted us? So, as you are mentioning that the size of the company has grown, and then only 75 crore revenue has been done by them. So, what took our attention? Any technology? What was the reason for them, the buyers?
So they ticked all the boxes. Number one, they work in the same clients as we do in South Africa. They are very strong. They have been there for nearly 40 years. Very well established. Very good team of people which we have got with them. Big asset. And, it's a lot of synergies. They are in Johannesburg, very close to our team. They are known to our team. They have been working together in lots of projects as JVs. We have formed a JV with them in the past. So that is a plus. And secondly, we are targeting, to build on, the synergy. If we buy a company and we cannot add value to it, then we cannot improve payback and, returns from it. So we are always looking at companies where we can use the synergy.
Sir, and you mentioned that for MP, sir, only to what sir was telling, allow me. And that conclude. Sir, you mentioned about that majority of the project for Madhya Pradesh, Jal Jeevan and other are being given and done. I think so. There was some reversal due to some project delays or there were some regulatory issues. Any update on the same, sir? So where are we in midst of that?
Yeah, we are in litigation right now. So for that particular contract, but otherwise we have 8 projects which we are running with Jal Nigam.
No update on the same, sir, as of now?
So litigation is proceeding. It will take time, please.
Okay. Sir, all the best to you, sir, to the team, sir, and sir, Shubh Deepavali, sir. Thank you.
Thank you and same to you.
Thank you. Next follow-up question is from the line of Namish Gupta from NGC. Please go ahead.
Sir, I have 2 more questions, sir. I think this was also asked by a previous participant, but just would like to confirm. Are we focusing more on products than on projects so that we want to take our share of product business, more than project business? This is my first question, sir. And my second question is, sir, are we also in this segment of pump storage projects?
So first question is that our project business had ramped up, so our ratio went off. That means we had gone down to 25-75% in domestic. We want to bring it back to 40-60 if we can. While so both businesses need to grow. So that is the positive thrust we are doing. And the environment for the product business is also improving. That is one. Yes, we have pumps for pump storage. Pump storage is also done by the pump turbines which we have commissioned in the river linking.
Okay, fine, sir. Thank you, sir. Thank you.
Thank you. Next follow-up question is from the line of Aditya from Savilo Investments Managers. Please go ahead.
Yeah, I just want to know the breakup of the product business between domestic and international. Order book.
Order book is about 540 crores in the international and domestic is 401 crores.
And for the projects business, what is the execution time?
Roughly 2 years is tentatively. Some delays, some approvals are get delayed. So it will take 2.5 years generally.
Sure. Okay. And just one last question. In this Kaleshwaram lift, the KLIP project, so there were some newspaper articles which had come up on the viability and all that. So I just wanted to understand, are we in any way affected because of that?
No, we are not affected. Yes, we are affected that the financing for the project got disturbed. It was earlier financed by Power Finance Corporation. Apparently there is some fund issue. So we are unable to get our last payments. But otherwise we are not affected. Our projects are well commissioned and doing very well.
So how much is stuck over there?
Not really stuck. It's a commissioning and the project closure process is on.
Okay, what is the amount? Can you let us know?
It's not available with me right now because it will have to be certified. So once the commissioning activities, when the closing activities are started, and then they will close it.
Okay.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to Mr. Prakash Agarwal from WPIL Ltd for the closing comments.
Thank you all for participating in this earnings conference call. I hope we were able to answer your questions satisfactorily and at the same time offer insights into our business. If you have any further questions or would like to know more about the company, please reach out to our investor relation managers at Valorem Advisors. Thank you and happy Diwali to you.
Thank you. On behalf of WPIL Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.